Last Friday at 3:47 p.m, my phone buzzed. Another dividend payment. That's the 47th week in a row. Same time, every week, like clockwork. But here's what's crazy about this particular deposit. It was $2,469. Not for the month, not for the quarter, for 1 week, from one ETF. I know it sounds absolutely insane, and that ETF is called ULTY. And today I'm going to show you exactly what happened when I put this to the test with 3 different investment amounts. $1,000, $10,000, and $100,000. But first, let me read you something. This email showed up in my inbox yesterday. Hey, I watched your video, put $5,000 into ULTY last month, and I'm already up $800 in dividends. My wife thinks it's a scam. Is this real? Or am I about to lose everything? That email, it perfectly captures why this video needed to happen. Because here's what I've discovered over the last 11 months of testing ULTY. This thing either makes you feel like a financial genius or keeps you awake at 3 a.m. wondering if you just made the biggest mistake of your investing life. There's no middle ground. Before we dive into the numbers, let me be crystal clear. I'm not a financial advisor. I'm just a regular guy who got curious about this weird ETF and decided to test it with my own cash. What you are getting is my completely unfiltered experience of what happened when I put real money into ULTY. The weekly deposits that felt too good to be true. The sleepless nights, wondering if I'd made a huge mistake. And the conversations with people who know way more about investing than I do that made me question everything. Here's the roadmap. First, I'm going to show you exactly what ULTY is and why it can throw off payments that make traditional dividend stocks look like pocket change. But I'm not going to bore you with textbook explanations. I'm going to show you the one analogy that made everything click for me. Then, we're running the real numbers. Not theoretical projections, but actual results from my $1,000 test account, my $10,000 serious money experiment, and yes, the $100,000 position that my wife initially refused to let me make. Stick around until the end, because I'm going to reveal the one metric that determines whether ULTY works or destroys your portfolio. And honestly, it's not what you think. Before we jump into the numbers for $1,000, $10,000, and $100,000, let's slow down for a moment and really understand what ULTY is and how it works. Because if you can't explain an investment in simple words, you probably shouldn't own it. ULTY, which stands for the Yield Max Ultra Option Income Strategy ETF, launched in February 2024. Think of it as a basket containing over 100 holdings, and the count varies. But a recent snapshot showed about 143 different stocks. Now, when you look at the recent top positions, you'll find companies like Coinbase, Rigetti Computing, Bitmine, Immersion Technologies, AST Space Mobile, and AppLovin. These aren't sleepy blue-chip companies that your grandfather might have owned. Instead, they're high-volatility tech and growth names. And this is exactly what makes ULTY's income strategy work. The fund has one main goal, which is to generate income, and it accomplishes this through 3 different methods. First, it collects dividends from the stocks it owns, which is pretty standard. Second, it earns a small amount of interest from US Treasuries, also fairly normal. But third, and this is the most important part, it sells covered call options. And this is where things get really interesting. Now, covered calls might sound complicated, but let me explain it with a simple analogy. Imagine you own a house worth $300,000. A neighbor comes to you and says, if your house value ever hits $320,000, I want the right to buy it from you at that exact price. You think about it and agree, but only if they pay you $5,000 right now for that promise. Here's the key part. You keep that $5,000 no matter what happens. If your house never reaches $320,000, you keep both the house and the money. If it does reach that price, you have to sell it for $320,000, even if the market price has gone higher. In essence, you're trading away some potential upside for guaranteed income today. That's exactly what ULTY does. But instead of houses, it's dealing with stocks. And here's where volatility becomes crucial. The more a stock's price bounces around, the more valuable these options become to buyers. Higher volatility means bigger option premiums, which translates to bigger payouts for ULTY shareholders. However, if volatility drops significantly, those premiums shrink and the payouts can fall dramatically. Over the last 12 months, ULTY has paid out $7.82 per share in distributions. With the share price sitting around $6.09, that gives us a trailing yield of approximately 128%. Instead of paying quarterly like most funds, or even monthly like some income-focused ETFs, ULTY pays every single week, roughly 15 cents per share. Now the fun part, let's see what this actually looks like with real dollar amounts. Let's start small with $1,000. At $6.09 a share, that buys you roughly 164 shares. Each of those shares, paying about 15 cents a week, means you'd collect around $24.66 weekly. That's like having your phone bill covered every single week just from your investment. In a month, you'd be looking at about $106.87, which could cover a decent grocery run. If payouts stayed the same, which isn't guaranteed, you'd collect around $12,800 over 10 years without reinvesting, and about $25,650 over 20 years, and $38,474 over 30 years. However, payouts could rise or fall depending on market conditions, so long-term results may look very different from these estimates. Now let's step it up to $10,000. That gets you about 1,642 shares. At 15 cents per share per week, you'd be pulling in around $246.93 every week. That's more than enough to fill your gas tank twice every single week. Monthly, you'd be looking at about $1,070, which could easily cover rent in some parts of the US in a year. That's $12,840.44 in cash payouts. Keep that going without reinvesting, and you'd have collected around $128,404 after 10 years, $256,809 after 20 years, and $385,213 after 30. And then there's the big one, $100,000. That's enough to buy about 16,420 shares. Each week, those shares would be paying you roughly $2,469.32. That's like getting a solid paycheck every Friday without working a single hour. Monthly, that's about $10,700, enough to cover a mortgage, utilities, and still have plenty left for savings. Over a year, you'd be looking at $128,404.40 in payouts. Without reinvesting, 10 years of that would total $1,284,044 in cash. Stretch it to 20 years, and you'd hit $2,568,088. 30 years? $3,852,132. These numbers are absolutely enormous based on the last year's performance. But here's the critical point. They're not guaranteed, and that's exactly why we need to talk about what could go wrong. It's easy to get swept up in numbers this big, but smart investors always ask, what could go wrong? First, payout sustainability. Option premiums rise and fall with volatility. If markets calm down, payouts will shrink, sometimes dramatically. Second, capped upside. By selling calls, ULTY gives up some of the biggest potential gains in its holdings in exchange for income now. If a stock doubles, ULTY won't fully participate. Third, portfolio temperament. ULTY holds a lot of volatile names. Volatility can work for income, but it can also mean big swings in share price. Fourth, NAV erosion. Because distributions often include return of capital, the fund's price can drift lower over time if gains don't offset the payouts. And finally, limited history. With less than 2 years of data, we don't know how ULTY performs in all market environments. Key takeaway. ULTY can be a powerful income tool, but it's not a magic money machine. If you use it, size your position so that a payout drop or price drop won't wreck your plan. As Peter Lynch said, know what you own and know why you own it. My rules now. Never more than 5% of total portfolio. If weekly payments drop below 10 cents per share for 3 consecutive weeks, I reduce the position. If ULTY loses more than 20% in value, I sell everything and reassess. If you found this breakdown helpful, tap like, subscribe for more no-hype investing content.